Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the show where you come to be informed, be amused, never be misled. Please like and subscribe. You can do it right there on this frozen deck of the Titanic, which reminds me of the name of the show. The name of the show today is Markets heading for fatal iceberg, and they're turning about as fast as the Titanic turned, and I wanted to be here and show it to you exactly how slow it's going to be, but they're just about to hit the iceberg. I think I heard somebody yell iceberg a minute ago. So today is May 15th, 2021. We have some amazing information for you today, and we're about to bring it out. And so again, like and subscribe if you would. Please, down here, over here, up here, down here, and you will miss no more information. We'll be right back with the charts. All right, welcome back. We're going to show you the charts now, and I'm telling you, we are heading toward an iceberg. I don't quite see it yet, but then I don't have those long-range glasses. I want to start off with Tesla, which is one of my favorite companies, and Elon Musk just lost about 33% of his money from the peak. He has also gotten himself mixed up in the whole crypto game, and he's lost a little money there too, and he's also pumped up some things, made people lose money there too. So he's not exactly making fans right now, and he's really not going to make any fans when all of a sudden he finds that he can't quite make it to Mars or the moon on Dogecoin or whatever, Dogecoin as he promised. So anyway, I want to show you Tesla because it broke down out of a bear flag, just as we'd predicted, and it actually, in red, the red ellipse does signal that, and this one is a leader. You know, every cycle, every market cycle I've ever noticed, there has been a market leader, a leader that wasn't necessarily a leading company, it was the leading speculative money, and this is Tesla and Bitcoin. And isn't it interesting that Elon Musk has gotten himself all into Bitcoin and everything else? You know, now he suddenly doesn't want to have Bitcoin on his balance sheet, even though he was going to give change in Bitcoin to anybody who bought a car with one. Right. All right. Next, let's go on. Here's Bitcoin right here. This is the exact same chart I used last time, and I mentioned we're in an ascending wedge, a little bit of a corrective pattern. It had broken down from an ascending wedge, and we speculated it was the top in Bitcoin. It may not be, but it probably is, especially now. Bitcoin, especially now that Elon is pushing against it and all that, yeah, people still listen to him. God knows why. Bitcoin right now, it's heading down exactly as we predicted. It broke down pretty large on Friday. Musk's statement had a lot to do with it, and we're going to show you some other evidence that this thing is kaput, as they say. The Dow is still meandering up in an ascending wedge, ascending wedge, ascending wedge, ascending wedge, ascending wedge. I keep getting sick of saying that, but it does. And, it may have a little higher to go. I've talked about three themes that have existed. Theme number one being inflation, theme number two being interest rates, theme number three being sort of an appearance of a strong economy that's based on obviously phony numbers. We'll talk about some of those, but the appearance and everything is good because of that's what's being reported by the media. As you know, the media is, cable news is the largest the leading cause of mental illness in this country. I should know. I got a little Tourette syndrome from it, and I get seizures every so often. I found out what number two is, and that's Facebook. I get seizures from that too, so I got to stop, reading everything in there, the fact checkers and all that kind of stuff. Yeesh. All right, so let's keep going. Nasdaq 100. Now, here's where we're starting to see things that we talked about finally actually happening. Okay? I mean, I know a lot of times we've been kind of like, it's going to happen, it's going to happen, it's going to happen. This time, it has happened, and it will continue to happen. On the Nasdaq 100, we had a breakdown from, some support level there. You can see it on the right. It broke down out of an ascending wedge, and a lot of the tech companies are rolling over, don't look very good at all. You have a lot of very heavyweight companies pulling this thing down. We'll show you that in a minute, and how the charts on them were right. The one thing about this show and the one thing about charting, I get a lot of questions about it. Why does it matter? Why is it important? Well, it's important because all the information known that investors know they bet on with money. You know, they're not here for political agenda. They're not here for anything other than to outguess the other guy. And so charts tell you that. They tell you what is going on. And so, you know, I just want to make sure that you understand that everything, a chart is a reflection of human behavior. Humans behave a certain way. If you haven't noticed it, look at the mania we're going through right now and some of the remarkable things. You know, it doesn't exactly, you know, it reminds me of a story of some idiot, you know, acquiring a tulip in the 1400s in exchange for a house. Somebody actually did that, and there are more of them today, unfortunately. Uh, the Nasdaq 100. Now here's a 2-hour interval chart instead of a 1-year chart, and look at that: highs below highs, lows below lows. It is now in a downtrend. It is broken below higher support. It has some support where it is. It might, you know, bounce up. Who knows? But this is on its way down. We said that a while ago. We believe it to be true. We're going to say it one more time. Nobody rings a bell at the top, but a week and a half ago, ding, ding. And while we're at it, ding, ding. All right. S&P 500 still now is not looking so healthy anymore. I've been saying that if I only had this chart to look at, I'd find it very healthy. It's not. All of a sudden, it's starting to break down. It's starting to break down because the Nasdaq is a lot more, and a lot of those companies have great weight in the S&P 500. I would say the Nasdaq 100 probably counts for 30% of it. So this doesn't look too good either. But there are sectors of the economy that are cooking, and we're going to talk about it. So it's confusing to look at what's going where and why, and trying to explain it, and then wrap it around some of the numbers that we get from all the Bureau of Labor Statistics and others that we know cannot possibly be right because we are thinking individuals, or at least some of us are. I don't know how much thinking I can do, but I can at least talk a lot. Small caps also not doing very well. They broke down slightly from a bear flag. We've been talking about small caps not doing well, and that's a sign that speculative strength is leaving the market. And we'll have more about that. We've actually triggered something called a Hindenburg omen. All right, a Hindenburg omen, and on Wednesday I'm going to tell you what that is. But a Hindenburg omen is a very good forecast of a market top and often a market crash. So we're going to explain that to you on Wednesday, the Hindenburg omen. It takes a little while to explain. It's kind of complicated, but I'll tell you, it tells you a lot about how the market functions. Dow Jones Transportation, still very important, still going up. And I'll tell you this, I had a problem with this before. I don't anymore because I now understand it. You know, even the rail companies are making deals with companies to guarantee them space in return for a fixed fee. In other words, you're Kansas City Southern, let's say, for example, and you want another company to do business with. Well, they have to guarantee you a certain amount of business. Okay, because it is in such short supply. Logistics are a problem everywhere you go, and right now logistics are, well, let's say FedEx is in a good place, or the transportations are in a good place for that. The U.S. dollar's getting killed. Duh, why not? The dollar should be a lot lower. I think the only reason the dollar hasn't gotten killed lower is because it's compared to the euro, and it's compared to the pound, and it's compared to other things which are made out of paper and basically are barely worth using as toilet paper. The Goldman Sachs Commodity Index, we've had the CRB on before. Now we're going to say that it's not just that one. Look at the Goldman Sachs Commodity Index. Rising, 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 and it's doubled in a year just as the CRB has. So you have confirmation from two different indexes that we have had that kind of price inflation at the producer level in a year, okay? But you won't hear that from the Fed because the Fed, well, they have a little problem with the truth. As a matter of fact, before we go on to lumber, I want to talk about the producer price index, which came out on, I think, Thursday. It was up 0.8%. The consumer price index the day before up 0.9. No one cares. So what? You know, it's still, inflation's still 2% no matter what, even if you have 0.8 and 0.9. And they're just getting started. Anyway, lumber, we talked about how it was just going parabolic, parabolic, parabolic. There must have been incredible shortages of it, and it probably led to some companies actually having inventory profits. Again, in the 70s, if you're an oil company, and some of us are around in the 70s because we've been around since the beginning of time. So I was around in the 70s, and they would oil companies had oil in the ground worth $3 a barrel. When the Saudis suddenly, did the embargo and oil went to 30, their inventory went up by 10 times. You don't believe that helped them? Well, actually it didn't, because politicians can't stand it, and they put on the windfall profits tax and made the whole crisis last longer. But right now what we're seeing in lumber is a huge jump and then a little bit of a retracement. And that's what we'd expect with something that is so, that has gone up so much. I have a feeling that, we'll continue to see lumber go higher, but I can't imagine how it go high as it did, a couple weeks ago. It just like zoomed. It's still up about 600% in the last year. So even if it came down a little bit, I don't think that would help the inflation situation at all, would you? These are home builders right here. Home builders are having a huge issue with, uncompleted projects. The materials are costing more. Wages are not enough suddenly. We have a shortage of workers. Wonder why? Because we pay them not to work. Duh! Anyway, home builders, they're still doing well, but they broke down out of a ascending wedge. The thing is, I'm not sure right now. I can't tell you that these have broken down permanently, because they may be in an ongoing bull market, and you see sharp breaks like this in a bull market. So we'll just have to wait this one out. But I'll tell you this, higher interest rates, higher prices for building materials, I'm not sure quite how that's going to work out. Actually, I'm sure. Terribly. Dow Jones REIT index, everybody asks about, is real estate in a bubble? Are we in a bubble? Should we sell? No, you're not in a bubble. What's happening is you are watching real estate as a hard asset, as a commodity, go up against the price, against a dollar. It's exchangeable for dollars, as is everything else. And just most recently, there's talk about the moratorium on evictions being ended. There's talk about landlords have been raising rates by quite a bit. Occupancy rates have gone up. People have managed to restructure how how they're set up as an office. And right now, suffice it to say, with more cash flow, real estate is going to go up. And it's also a hard asset, so it's priced against a dollar. It's also going to go up. It's cheap to finance right now. It's also going to go up. So, it's not in a bubble. If you think it is, you'll be pissed off at yourself in a few years, saying, why the hell didn't I listen to Marco? Okay, this is gold. I've lamented that gold has shown none of the upside it should have shown in an environment that is not only inflationary but may become hyperinflationary. We've seen numbers of the money supply growing like crazy, like multiples. Like, in other words, in 2020, we had as much money supply growth, I think, okay, I'm not going to swear to this, as we had in the prior, 100 years. So there was just an absolute I'm sorry. I get upset about the word stimulus because I haven't gotten a stimulus check yet. And everybody else seems to have gotten them, and for whatever reason, the government knows where to go when it comes to getting tax money from me, but not when it comes to stimulus checks. Ooh, I said that without anything bad happening. That's good. I must be getting mentally a little more stable. I doubt it, but you never know. Gold may have broken out, and I say may have. Normally I would say would have, but in this case I say may have, because it has fooled us so many times. It feels like every time I've gotten bullish on gold, I'm like Charlie Brown, and Lucy pulls the football out from under me. She swears she's not going to do it, but she does it anyway. I fall flat on my back. So we're going to wait a little bit of time on gold, but as I said last time, if this is a breakout, our target for gold is going to be about $2,700, $2,600. You have a lot of time before that happens. I would say that we'll know maybe by Wednesday, if not by Wednesday's show, the following Saturday show, and we will have some miners for you to look at, for you to consider. Silver looks a little bit better because it's a sideways pattern. We've shown you the same chart forever. This thing is building up a lot of energy. When you have a pattern this long, this sideways, this much churning, the movement out of it is going to be very strong. And that's one of the things, is that if you see a breakout to the positive, that means everybody that owns it is positive. And if you see one to the negative, everyone that owns it is negative. That creates different behavioral dynamics in investors. So, it's very important to see what it does. But in my mind, it's about as high a percentage as possible, because there's limited silver and now apparently unlimited dollars. You can have all you want. So who knows? Big oil is now doing very well. Big oil is making inventory profits. And not only that, but the cost of getting oil out of the ground has gone up, because one of the biggest components of getting oil out of the ground is oil. That's one of the things. Oil goes up in price, but it costs more to get it out and to move it on the pipeline, because that takes energy and that takes oil. And it also takes energy and oil to refine it and to move it to a car. So you end up using a lot of oil trying to produce oil. The 10-year treasuries we've talked about last week, they had what was a kind of a key reversal day. Well, they still haven't really gone higher, but they've also been inching higher every day. So right now we're being told, and investors seem to be swallowing it, I don't know why, that all of a sudden inflation is transitory and marginal and all that kind of stuff. Well, I don't know about you, but rents have been going up for about ever since I can remember, about 8 to 10% a year, 6 to 8% a year. Food has been going up. Everything's been going up. The only thing that hasn't gone up, maybe a computer here and there, but which, as we know from the CPI index, is probably weighted to 80% computers, and the rest of it is stuff that are lifetime necessities. So that looks pretty good. The 30-year looks also very good. It's broken out 2 patterns right now. I'm going to bet you it makes a new high, and it makes a new high very soon. I think this thing is heading all the way up to 3%, and 3% is still cheap. And I'm not, by the way. I am not cheap. I'm not cheap. You may think I am, but I'm not. All right, these are called the Treasury Inflation Protected Securities, or TIPS. Now I'm going to give you a tip. These are securities that are market measured inflation rates. The higher the principal of a tip goes, the higher inflation expectations are. The reason that these trade above par, they're usually created this way. They're usually created with a spread over CPI. You get that coupon, and then you get, in CPI, you get the principal. Well, that's good up to a point, but as we know, the CPI is about 1/3 of inflation. So, unfortunately, you have to live with government's, the government's somewhat shoddy algebra. This is the stock to buy if you want to, if you really want to hedge yourself against inflation. It's called the ProShares Ultra Short 20-year Treasury, and basically it goes up as yield goes up. And you can see that here. It looks like a great pattern. It looks like it's going much higher. And if we end up seeing, 30-year rates at 10%, which I am not going to tell you is unfathomable, unplausible, on anything. I think it might very well happen, because no one has lived in an inflationary environment, but old farts like me. And you don't listen to me anyway, so what do you care? Anyway, here's Apple. What we did the same thing last week. We're going to compare Apple and some of the big Nasdaq stocks to the 5-year charts, because the consolidation patterns are now so long, they're so wide. I want to show you, the wider they are, the bigger they are, the more people, the more violent they're going to be. And as I'm starting to look around, we're looking at some potentially violent patterns, and I'm thinking down, so, caveat emptor. Apple here almost broke down out of its bear flag. It bounced a little bit, okay, but not a lot. The Nasdaq is not that far from its highs. Nasdaq, Apple is ready to break down out of a bear flag that's lasted almost a year. Same thing if you look at it in a 5-year. And Apple can still go all the way down to 75, 80, 90 without any visible support. There's all the trading was up, almost straight up. So there's not a lot of people that at any one particular juncture. Once you start getting a pattern where there are a bunch of people trading stock back and forth in a sideways pattern, then all of a sudden you do have a lot of people. Here you don't have a lot of support. This thing could go down a lot. It might not. It might. We'll see. Well, Amazon's got the same thing. I mean, you look at that sideways pattern on Amazon, it's lasted almost all year. It's a 600-point swing there and back. So you got an awful lot of people, an awful lot of volume that if it breaks down, they are going to behave a certain way. And if it breaks up, they're going to behave a certain way. Now, if you look at Amazon for 5 years, you can see that it has its next support around 2,000. So if it breaks above, if it breaks down below the 2,900 level, it could easily see 2,000 without having a lot of support. So you got to keep those things in mind. Sometimes even the long term may help determine your short-term trading. In this case, I think it should, because this is a relevant piece of statistic for you. Facebook, the company I love to hate, and the CEO I love to hate, this one to me looks like it actually may be breaking down. I don't know. We'll have to see. But I'd love to. I've got to say this. The company's been a success, and for my for my comments on Mark Zuckerberg, I'm going to have to apologize. I mean, the guy's as clean as a whistle. Let's face it. I mean, he bans all cryptocurrency advertising, but then puts out stablecoin himself. So, the guy knows what he's doing, and the guy's never a hypocrite, and he never allows people on WhatsApp and Instagram to openly solicit prostitution, drug selling, and scamming. He doesn't allow that. He absolutely is supported by it. I called customer service the other day, and they invited me in for a meeting. I went in. There was a 1,000-foot conference room and a Coke machine, and Mark Zuckerberg talked to me for about 3 seconds over Skype. So we got it all settled out. We're all good buds right now. Thanks, Mark. Google, right now I'm only showing you the 5-year. Look how steep that is. Google is at the bottom support of a 5-year straight up type of move. It's a great company. I'm not gonna criticize what they do. Probably could. I probably would. Probably should, but I won't. And Google's, it's due for a correction here. So, if you own this thing, my advice is take your money off the table before the table takes your money off of you. It's going to happen. I mean, a lot of these companies are so heavily priced right now. If you look at the GDP or the market cap ratio to GDP, the U.S. ratio, it's 2 to 1. That's twice what it was during the dot-com bubble. We have a total market cap of $44 billion and GDP of $21 billion. Okay? That's a mania for you. Microsoft, same thing. It's got a ascending wedge. It's at the bottom of the support. When this thing breaks, and I said it last week, when this thing breaks, it'll take several years for it to work off all that excess. So, if you do not sell it now, you're going to have dead money for a long period of time. So, it's very unlikely it's going to go up even steeper than it is with rates going up and all that kind of stuff. Netflix also, we've shown this pattern before, but I want to really focus on the 5-year pattern because it really shows how Netflix is slightly broken down from a bear flag, and it has some ways to go down itself. So here's most of the companies that form the big market cap type companies that are leaders. Most of them are starting to edge negative, if not gone fully negative. And another example for you is Qualcomm. Qualcomm, look at that. It broke it looks like Tesla. It broke its bear flag. So, with the chip shortage and the logistics and the car companies and everything's being short and bottlenecked everywhere, well, here's unfortunately a victim of it right here, Qualcomm. So there's got a reason, but the charts told you that right there. And this was picture perfect charting right here. So the Airline Index is kind of an interesting one. It's one that I can never understand, and so I can never explain to you. But the Airline Index is actually broken up. I don't know why. Airlines are suddenly all of a sudden seeing an increase in traffic. Duh! Like people haven't traveled in a long time, so of course they're going to want to travel a little bit, but you're never going to get back to any kind of level that you saw before because of things like Zoom and people's work habits have changed. I don't intend to get on a plane to go visit a client at this point, but I'll certainly have a Zoom conversation with them. And there's and international travel is problematic because of all the mask requirements, the vaccine requirements, all the stupid requirements, plus the colonoscopy that the TSA gives you before every flight, so you feel better, and then you have to wear the mask on the flight. Oh, that sounds like so much fun to me. FedEx is another really vital, important company, and here's one of the reasons the transports are doing really well, although it's broken down a little bit. I don't know if that's significant. I'm not going to say it is, but FedEx is handling logistics really well, and they're become a very important company, and they can charge a lot more because right now there ain't too many players in the game that are as good as them. One, of course, being UPS, and look at UPS. It just went off the charts all of a sudden, and the whole getting stuff from point A to point B has never been harder. It should be pretty damn easy, but it's pretty damn hard. Okay, so I'm going to have a really interesting segment for y'all, and these are 4 companies that are involved with crypto, Bitcoin, and everything else that are publicly traded, and that have, well, let's just say, I'm not sure that they've made the best decision of their lives. I'll leave that up to you. The first one's called MicroStrategy, and look at that, it's breaking down like crazy. It owns 2.24 billion of Bitcoin. I guess it has nothing better to do with its money, but this thing has gone up parabolically and broken. It's gone all the way to 1,300, and it's now all the way below, it's all the way below 500. It's $600, and it's all because of ownership in Bitcoin. This company, it calls itself such an intelligent business consultant, and look at it. It's all it does is play in Bitcoin. Overstock.com accepted Bitcoin for payments as early as 2014. In 2018, they decided to shelve all the retail business they had and move into cryptos. Well, guess what? They have less than 1% of their sales, less than half, since 2014 in Bitcoin. I have said there's no e-commerce in Bitcoin, and this is a proof of it. This company has gone, the only reason it's gone up is hope that something's going to happen, but it's made nothing happen, and it doesn't really have a whole lot. It doesn't do much in Bitcoin. So, that's one play. Riot Blockchain is kind of interesting. It's a miner. Now, what a miner does is it actually creates new Bitcoin and it processes transactions. It's a kind of a complicated situation, but it is wholly dependent on Bitcoin and Bitcoin's prospects. And as you can see, it's broken down too. And finally, we have a company called Square, which owns Cash App. And I will tell you, the Cash App still owes me $250. They're holding on to my money. And this is not exactly a company I'm just going to say good things about. So guys, I want my money back, number one. And number two, you're in a rounded top. Sorry, but that doesn't look very good. We're going to be back in just 1 second and wrap up the show and some announcements about next week, which is going to be an amazing Wednesday show. Oh my God, my fortunes are sinking and the ship is sinking. I don't know what the hell I'm going to do, but I found a flotation device. You're going to believe this one. I found the best flotation device possible, and we're out of here, and we're going to survive this.